point, but maybe even sooner on Hedera, which would be really cool.
Yeah.
You mentioned lending and borrowing, playing a big role in that. How do you think it might impact, overall liquidity or functionality across the DeFi ecosystem, and maybe how it plays off of that interconnectedness that you described?
Yeah. Historically, borrowing and lending has been like a big pillar for the transaction volume on other L1s. So like if we look at all the other successful DeFi ecosystems in Web3, borrowing and lending has been a big part of why they've just grown so much. It allows traders to engage in more complex strategies. It allows people who are holding tokens to do more with it. And I think that that's really the key here, is that a lot of the tokens, although they have their like base utility that each project is providing, having these DeFi pieces that allow users to utilize those tokens in more ways and generate value and allocate their liquidity in different ways that make it more fluid and make those funds more available and just like compound on each other and bring value to the ecosystem. I think that that's really the thing that I expect to see from Bonzo and from other lending and borrowing platforms that are coming to the ecosystem.
Alrighty, what is going on, Wealth 28 Club members? Welcome back to another quick CYPRX video breakdown. This is going to be a detailed video going over Bonzo Finance built on Hedera. We're going to dive into the weeds of it. This might not be too comprehensive, but at a minimum, it'll at least fill in a perspective as to what Bonzo Finance is, the capabilities that you have by utilizing the platform, to introduce you to some links so that way you can do your own personal research moving forward. Keep in mind that none of this is financial advice. I am not endorsing this platform, nor am I telling you guys to go out there and take your Hbar and provide it on this protocol or anything like that. I'm simply just showing you all what it is that I'm doing. So obviously, of course, assess your own personal risk. Now, before we get into Bonzo Finance, and I kind of just go over, generally speaking, what it is, taking a look at the website, going over some of the documentation, keep in mind that if you all want to actually learn a lending and borrowing strategy and how to keep your liquidation threshold relatively low, especially during times of market turmoil, make sure you tap into the private CYPRX Discord so you can join our DeFi Zoom calls on Wednesday, where one of our mentors, Kevin, goes over his lending and borrowing strategy and shows you all in real time how he's been able to maintain during high times of market volume and volatility, while also maintaining a rising equity curve. And you can see all of those Zoom call recordings. If you all want to take a look at those recordings to learn Kevin's lending and borrowing strategy, just head over to CYPRXtrading.com, tap into the private Discord, and then you guys have direct access to this private playlist in the educational video material. Also, Kevin hosts these Zoom calls on Wednesdays. And the reason why I'm going over this is because for Bonzo Finance, I'm not going to right away be participating in both lending and borrowing. I'm only going to be lending and keeping the ability or the opportunity for myself to borrow against my assets at a later date when I feel comfortable. So in this video breakdown, we're not going to go over lending and borrowing, more so just the lending side and aspect of Bonzo Finance. So Bonzo Finance, currently right now, according to DeFi Llama, actually, let's go look at their website. I believe there's a little bit more TVL. Yeah, so according to Bonzo Finance, there is $43 million in total value locked. According to DeFi Llama, there is about $30 million in TVL locked. So Bonzo Finance lets you treat your crypto like a line of credit instead of a souvenir. You can deposit your Hbar or any supported Hedera token on the platform for that matter into the protocol's lending pool.
And what we're offering is a lending protocol, like I said, based on Aave. Users can take out over collateralized loans, so essentially supplying any supported asset as collateral into the protocol. You can just supply and earn interest on what you've supplied, or you can use that value supplied to borrow other assets that are supported by the protocol. So every supported asset is effectively interoperable in this way. And we're seeing a ton of usage. So, at launch, we were, I think, the fastest growing DeFi protocol on Hedera. We're now ranked number 2, right behind SaucerSwap. and we're sitting at about 33 million in liquidity, with about 30% of that being actively borrowed. We're starting with lending, but going back to the concept of thinking through this strategic lens of workflow automation and reducing complexity, we're on a path to become the liquidity layer of Hedera, which means we want to ensure that not only do we have a large aggregation of liquidity for this lending layer, which allows for other DeFi protocols to come online that offer different, more advanced functionality that use this layer, but also expanding the offering into other products, such as bridging using layer 0 and Axelar within the Bonzo interface, and then also a vaults functionality, which is going to allow people to be able to utilize automated strategies that don't just touch the lending side, but also actually route liquidity out to other DeFi protocols across the ecosystem,
where it immediately starts earning interest from borrowers. If you need cash, you can use that same deposit. For example, if you deposit Hbar, you can use that as collateral and you can borrow things like stablecoins against it without having to sell a single Hbar token. So you can keep exposure to any future price rallies while also still covering things like bills or expenses if you need to, or new investments that you want to make in the space, or taking that capital and utilizing it in the DeFi ecosystem. Now, the smart contract tracks your collateral value in real time. So if markets fall too far, you will need to pay back your loan to avoid liquidation. But as long as your health factor stays solid, you're effectively turning idle tokens into a productive asset and a bank-free credit line at the same time. So in a nutshell, Bonzo transforms sitting crypto into working capital, letting you borrow when you need liquidity and lend when you'd rather earn passive yield, all while you remain in full control of your keys. And so here is the Bonzo Finance X profile. Make sure that you guys are following the right profile so that way nobody gets scammed out of their holdings or anything like that. You can see the link. You can see the Bonzo_finance. Just go give them a follow so you can start to pay attention to things that they post, maybe spaces that they're on. You can see here about 6 hours ago, they hosted a space. And if we just come over here, taking a look at their website, features and benefits. Number one, you can supply, which is primarily what I will be doing, where you can deposit your crypto assets to the Bonzo Finance protocol and earn competitive interest rates. Your supplied assets help provide liquidity to borrowers while you earn passive income. That's primarily what I am after. Now, if I do decide to borrow against my Hbar, I will only be borrowing stable coins so that I don't have to deal with other digital assets that are volatile in this space. And at most, I might take those borrowed stable coins and go and deploy them into a yield aggregation platform or some type of staking platform where I'm earning yield, or some type of liquidity pool where I'm earning rewards on those stablecoins. But here it also mentions that you can access instant loans by borrowing against your crypto collateral. Borrow a variety of assets at a competitive rate, allowing you to leverage your holdings or access liquidity without selling your assets. That is extremely important because as more people catch on that they don't have to sell their digital assets, more people are going to enter into the DeFi ecosystem, and that is just going to create more demand. NFT utility it also offers, and then it mentions earning points and earning extra yield. So definitely go take a look at these other three options here that we're not going to go over in today's video breakdown. Again, just primarily focusing on lending and borrowing. So if we come over here, this is directly from the Hbar Foundation. It mentions how the Hedera network is progressively rolling out foundational and advanced protocols to enhance its DeFi ecosystems, and the next leap is bolstering lending and borrowing services.
And one of the North Stars for this.
And I think you look at a market that's north of 10 trillion of assets. It's all paper.
Yeah.
There's really no digitization, blockchain or otherwise. And so I think it's only a matter of time until you can perform those other functions, lend, borrow, provide liquidity to facilitate trading, these types of things, which also enhance your returns.
Yeah.
Right. So by making it composable, now you can actually boost your return on top in a fundamental way.
Yeah.
And so I don't think, smart money is going to leave that on the table once they understand the mechanics.
Yeah.
Now, the lady that you heard at the beginning of this is the CEO and co-founder of Hashback, sitting alongside Brady Gentile, hopefully I'm pronouncing that name correctly, the co-founder and CEO of Bonzo Finance Labs. And she held the same perspective here, that lending and borrowing are going to be huge in the DeFi ecosystem on Hedera. Now, the Bonzo Finance protocol operates single asset pools, which means users can supply assets like Hbar, HBAR-X, or stablecoins without pairing them with other assets. This eliminates the risk of impermanent loss, a common challenge in DEX liquidity pools. So if you're an individual who's been seeking ways to get your HBAR to work, just like I have, you don't want to experience or expose yourself to impermanent loss. For example, on Saucer Swap, you go and you become a liquidity provider for two currency pairs, and you do have to deal with impermanent loss or the weighted balance of the DEX itself, depending on market volume and volatility, weighting your pool into another asset, so on and so forth. And so you don't have to deal with that here. So that's one thing that I personally like. As I'm turning into this DeFi investor that wants a more hands-off approach, I want to continuously generate yield and passive rewards without having to, be proactive in my positions, without having to actively manage my DeFi portfolio every single day. I'm willing to actively manage my DeFi portfolio maybe like once a week or bi-weekly, or maybe even just once or twice a month. That's primarily what I'm looking for. And so this platform fits that, strategy of mine. It says here, assets deposited in these pools become available for borrowing while earning interest, effectively activating idle liquidity across the entire DeFi ecosystem. Lending protocols are particularly attractive for who? Individual users, where they can earn passive rewards by supplying assets. Institutions, they can earn yield on and borrow against larger amounts of idle liquidity. And token projects with treasury reserves can allocate portions of their tokens to earn rewards and manage their liquidity effectively. So this is just all of the documentation. And so again, just trying to show you guys how you can go and do your own personal research. I highly suggest you do. Scroll down to the bottom of their homepage, which you can find in the bio of their X profile. If you just click right there, it'll take you over to their homepage. You scroll right down to the bottom and click open their documentation. What I like about their documentation is it's very transparent. There are a lot of how-tos in terms of supply assets, how to withdraw assets, giving you step-by-steps on each of those, how to borrow, how to repay a loan. Definitely before you utilize the platform or, expose your capital on this protocol, thoroughly read through this and utilize test amounts. I cannot stress enough. For example, in today's video breakdown, I'm just going to show you a quick test amount on how to lend out your Hbar and just walk you through that simplicity of the platform and show you guys how easy it is. But regardless of how easy it can be sometimes, always make sure that you go thoroughly through and read the documentation so you understand the protocol in full.
Playing with these technologies is the absolute best way to learn. So jumping in and just trying it out, understanding how it works, basically learning by playing across the entire, like any emerging tech is going to be the most valuable thing anyone can do, and just staying very curious about how everything works and new things that are being introduced to the ecosystem.
So you have all of that over here. You have their roadmap. You have a whole entire documentation on liquidations, understanding the liquidation penalty. Like I mentioned, if you don't understand this stuff, you don't know how to implement it in a strategy profitably, take into consideration tapping into the private CYPRX Discord so that way you all can join in on the DeFi Zoom calls on Wednesday with one of our profitable DeFi mentors who shows you all how to do this and is actively utilizing the Bonzo platform. So you can ask as many questions as you would like, right? What I also like about the documentation is that you can go and you can take a look at the team here. You have all of their LinkedIn and X profiles, so they are transparent with who's behind this protocol. And then they also have the audit log, just so that way you have a peace of mind and you can see the audits yourself. They also have a bug bounty and they have their contact information directly here, right? So make sure that if you guys need to get in contact with them, they have a Discord. I'm assuming that you could probably reach out to them on Discord or directly utilize their contact and support mechanism on their document pages. So moving on, let's just continue down the rabbit hole. This is something else that I found where it talks about enabling or disabling collateral. Just thoroughly reading through this so that way nobody is confused. Enabling and disabling supplied assets as collateral allows for more nuanced control over one's lending and borrowing strategy within the protocol. Assets supplied to Bonzo Finance are enabled as collateral by default. This means that after an asset is supplied to the protocol, users can then borrow against a percentage of the total value supplied. This percentage is called the loan to value ratio, or the LTV, and varies for each asset based on its individual risk profile. Now, here it says it's more important to note that assets supplied as collateral are only susceptible to liquidation if the user is borrowing other assets against its value. If you are not borrowing, your supplied assets cannot be liquidated, even if they are enabled as collateral. In addition, reward APYs continue to accrue when supplying an asset, even if it's disabled as collateral. This is important for me and something that I actually had as a question, but found the answer directly on the page itself, because I'm simply just going to be a lender. I'm not going to be borrowing against my assets. And so I wanted to make sure that not borrowing against my assets, I was not susceptible to being liquidated. And there's my answer right there. If you're not borrowing, your supplied assets cannot be liquidated. So I'm pretty much just going to be utilizing this platform, and I'm just going to be lending out my assets. And if I want to borrow against my Hbar, I can. However, right now, I'm just going to remain in the lending side of things and just earn the passive rewards. Coming over here, we can see a recent announcement from February 25th, 2025, that Bonzo Finance, the largest lending protocol on Hedera, has integrated the Chainlink standard for verifiable data, starting with price feeds for Hbar and USDC. Chainlink enhances the data security of Bonzo and accelerates the growth of DeFi on Hedera. I like that because we know Chainlink works with some of the largest financial institutions, including organizations like the DTCC and Swift, and they partnered with Bonzo Finance. So that was just something cool to see, to throw in there. Now, assets that are supported right now as collateral. So upon enabling borrowing, the Bonzo Finance protocol will only allow right now for 5 low-risk assets to be utilized as collateral. Over time, however, Bonzo Finance will start to allow more assets to be utilized as collateral and begin lifting risk parameter configurations. If in an account supplied any amount of the following assets, its value can be used as collateral for which to borrow any other assets applied to the protocol: Hbar, HBAR-X, USDC, SOS, and XSOS, right? So coming over here to the platform itself, again, when you're on the home page, you're going to have this configuration up here, this button at the top right-hand corner that says launch application. Ahead of time, you will need to have a Hashpack wallet account. And I already have mine, and I have some Hbar already sitting in my Hashpack. So just so that way any beginners listening in, you will need to download Hashpack on either your mobile device or on a browser extension, and you will need to fund it with native Hbar. At least that's the route that I'm going to be taking. You obviously, of course, depending on the asset that you want to lend out, might be taking a different route. So starting from scratch, I purchased Hbar on an exchange, a centralized exchange like Uphold. I obviously, of course, had already established a Hashpack wallet, written down my seed phrase and whatnot, and then funded my Hashpack wallet with Hbar that I bought from the centralized exchange Uphold. Very simplistic process. You just simply copy your wallet address and send the Hbar from Uphold to your Hashpack wallet. So starting there, then we're going to go in, we're going to launch the application. That then takes you to this user interface. Okay, I do like the user interface. It's relatively simple. You can see up at the top, you have all of the dashboard links, dashboard, points, analytics, claim your rewards, stake, the documents up here. You have all of the APYs. Right up here is your loan to health ratio if you're going to be borrowing against your assets. I'm, however, just going to be focused on this box, which is the supplied box. And then you also have the borrowed box, which tells you the amount of collateral that you have, tells you the debt that you have if you do borrow against your assets, tells you the APY and the additional incentives that you're getting on top of the original APY. right? So you can see in total here, you're getting roughly about 5% APY on your Hbar if you lend it out to this platform. So you can see the balance that I have here. I've already sent a test amount just to make sure that this was going to go smoothly for the recording, which is about $8. However, right down here is where we're going to start. If you did not have any supplied assets yet on this platform, you can come straight down here and you can see the list of assets that you can supply. So they do have a multitude of assets. We're primarily just going to focus on Hbar. However, you could also come right down here and you can supply USDC, which I think is really cool. If you're just sitting on idle capital, idle cash, that you're waiting to use to dollar cost average into certain projects. If you want to earn yield on that, instead of it just sitting dormant in a checking account or savings account that's not yielding anything, you have the ability to come here and you can lend out your USDC and earn yield. However, back to this. Okay, so you can see these little 3 dots. You're going to click that and you have 2 tabs. You have supply and you have borrow. Right? So you're going to go ahead and you're going to click supply and you're going to walk through that process. So once you click supply, you can see it's going to ask you very simplistically the amount of Hbar that you want to add. Now I'm only going to add, let's say 250 Hbar units, which is roughly about, 250 Hbar, which is roughly about $43. Just check everything. You earn 1.1, right? It's telling you everything. Okay, go ahead, click supply. I'm not too entirely sure if you guys can see my wallet pop up, but it's just asking me to confirm the transaction in my wallet. So just give me a second, real time, while I do that. You're just going to go ahead. You're going to approve the transaction in your Hashpack wallet, by the way, which you connected to the protocol Bonzo Finance. I don't know if I went over that process, but make sure that you connect your wallet. It's going to ask you for that connection. You just go ahead and approve. Done. All right, all good. And you saw that message pop up and now we're good to go. So now you can see my balance up here changed from $8, what it was before. And now I'm supplying roughly about $52 to this protocol, earning yield on my Hbar. Now, if you have already deposited into this supply box here, or you've already supplied Hbar and you want to add liquidity to your position, you then would come up here to these 3 dots. And you can see it says supply more. So that's why I left a little bit of a balance in my wallet so I can show you that. So we're just going to go click supply more and it walks you through the same process. So that was a question that I had at the beginning. Do you have to sign a new smart contract? Do you have to like liquidate your position and open another position if you want to add more collateral? No, you can just simply add an additional amount on top of what you already have. So we're just going to go ahead, click max and utilize the rest. I'm just going to actually put 80, supply the rest of that Hbar in my wallet via this test amount. I don't know if you guys can see, but it's just asking me to approve the smart contract in my Hashpack. So I'm just going to go ahead and approve that. And then boom, supplied successfully. All right. So very simplistic. Then when you come up here, you can see this button. I mean, you have the tabs up here at the top that allow you to claim, or you could just click the claims tab here. So whenever I do have rewards, you can see that this is where it's going to allow me to, go over my summary of rewards and how much I've earned. And then you can decide what to do with those earnings. Now, if you want to take, to borrow against your asset, you're going to come down here to the 3 tabs and you're going to click the borrow, right? And so if you want to borrow, you can see here the amount that you have to borrow. You would then just go in and type that amount and then walk through the same exact process of signing the smart contract, borrow against your Hbar. And then boom, what you'll see is that, for example, if you want to borrow USDC, after you go through the borrowing process, you sign the smart contract and validate it in your wallet, you'll see the USDC pop up in your Hashpack wallet, available for you to do things with in the DeFi ecosystem. To take that USDC, you could send it to your bank account, you could send it to your crypto.com wallet card, and you could go out and buy yourself a smoothie with that without having to sell your Hbar, which I think is an insane opportunity for individuals that don't want to sell their Hbar, but still want to be liquid or still want to do things in not only the crypto ecosystem, but also in the DeFi ecosystem as well.
And when you've got players like BlackRock jumping into the space, and we work with Janice Henderson, you've got big asset managers who are committed to being in the tokenized space in the funds industry. I think every asset manager we talked to in the past year has wanted to get in. So the conversations with those asset managers 2 years ago were, why would we do this? And now they're, how do we do this? And when do we do this? And how, it's become inevitable. They see the momentum, they see BlackRock in the space, they can't fall behind, so they've got to jump in.
So very simplistic process, very easy breakdown, nothing too significant. I just wanted to kind of go over and show you guys this protocol. One of our mentors is actively utilizing this protocol. So again, if you all want to learn his profitable lending and borrowing strategy, tap into the CYPRX private Discord so you can hop on these Wednesday Zoom calls that he hosts every single week, going over his DeFi positions, going over protocols that he's tapping into. I can't stress enough, now's the time to learn these things. Today was just me going over a test amount to show you how simple and easy it is to do so. Moving forward, just to be transparent with you guys, I'm not deploying all of my Hbar on this platform. Personally, I'm going to remain diversified, meaning I have portions of utility assets that can be deployed in the DeFi ecosystem on some protocols. For example, some Hbar on SaucerSwap, some Hbar on Bonzo, maybe some Hbar on Stater, but then also keeping a portion of my Hbar in my cold storage wallet just in case these protocols go bust, they get hacked, whatever the case may be. At the end of the day, just making sure that I don't put all my eggs in one basket to attempt to minimize and spread out my risk. With that being said, hopefully you guys enjoyed this quick walkthrough. Again, very simplistic lending and borrowing on Hedera. Super stoked about the growth of this protocol to see where it goes in the future. With that being said, I'll see you guys in the next video breakdown.